Should you buy or rent in 2023? Hi everyone, welcome to Daniel Lee on Investing. Today we'll talk about the basic pros and cons of each option. We'll also do a deep dive on this topic through the lens of investing. If you're not sure and still deciding, I will tell you the things I have done that allowed me to enjoy the best of both worlds. At the end of the video, you will learn how to look at this as an investment decision. And I will give you 4 bottom line questions as a checklist to help you navigate through this process. Okay, now let's begin by talking about the pros and cons of each option. There are 2 pros and cons I want to talk about buying a house. Pro number 1, stability. Putting the investment stuff aside, the most obvious benefit of owning a house to me personally is the stability. On average, as a renter, I find myself having to move to a new place every 2 or 3 years. I still remember how inconvenient it was to find a new place. Just spending time doing research, traveling across the city doing inspections, and then being profiled by potential agents or landlords. Because I wanted to reduce my living expenses as much as I can, I always end up sharing the house with some of the housemates. This is not an issue for me, but when I move to a new place, there is a risk of not getting along with the new housemates. If you are a family with kids, things can even go even more complicated. Owning a house pretty much eliminates all that trouble. To me, I know this might be purely psychological and might be strange to some of you, but having my own place is like having an anchor, and that's really comforting. Pro number 2, building wealth. There's no doubt that the property market is a wealth generation machine. I live in Australia, so take that as an example. The residential property price has almost doubled from 2012 to 2022. It's the same story in the United States. The average United States housing price has increased from $297,000 to $547,000 during the same 10-year period. You may say, oh, that return isn't that impressive compared to investments like Bitcoin or Tesla. But remember that real estate property are generally viewed as a safe, low-risk investment, so I think the returns are a pretty good deal considering the risk. People often say that with property investment, you can earn money while you sleep. With the volatility of Bitcoin or Tesla, I'm not really sure about the sleeping part. Plus, there is all kinds of different things that you can do to your property to magnify your returns. Okay, now let's look at the cons of owning a property. Number 1, it is expensive. Buying a house is a big commitment and also an expensive one. The entry cost is probably the highest among all asset classes. In my case, I need 20% deposit, pay all kinds of government fees and third-party service fees before the property is settled. It is quite difficult to save all that amount of money. Sometimes the goalposts just keep moving because the property price also goes up while you are saving for it. Then there is the ongoing cost. The biggest one is probably the monthly repayments when you are buying with a mortgage, which most people do. My mortgage repayments has increased by around $1,500 per month since the rate increases started in 2022. That basically reverses all my pay rises since 2020, and that's like 3 years of hard work. Now let's talk about renting. It has the obvious benefits of mobility. As a renter, it is a lot easier to move from place to place. This can sometimes open up new career opportunities or even new life experiences. From an investment point of view, renting can free up your capital and allow you to pursue other investments. So it may be the option that generates the higher return on investment. For example, when I purchased my house back in 2015, Bitcoin was about $400 per coin. Today, Bitcoin price was around $20,000. That's a 5,000% return on investment. This kind of return is almost impossible in the property market within the same investment time horizon. Similarly, had I invested my money in Tesla stock in 2015, I would be able to comfortably retire 3 years ago. And just to be conservative, I would still be able to double my money if I invested my money in S&P 500. And that's slightly a better return on investment than buying a house. Don't get me wrong, I'm not suggesting that you should buy Bitcoin with your house deposit. In fact, I think that's actually a very bad idea unless you are comfortable with the risk. Remember, we are now running the calculation in hindsight, and the past performance does not predict any future returns. Overall, I still think buying a house is a good investment, even with the potential opportunity cost. Most people buy with mortgage. This is effectively using leverage to increase return on investment. So the opportunity cost is really only apparent when the alternative investments gives you a much higher return, as it is the case with Bitcoin or Tesla. So in the case of S&P 500, I'd still end up with more money in absolute terms with my money invested in the property market. This is because both options has a similar return, but with my house purchase, I'm leveraging my money, whereas with S&P 500, I'm not. So I can obviously use leverage when investing in the S&P 500, but this has a much higher risk due to the volatile nature of the stock market. When a black swan event happens, such as the flash crash in March 2020, I could end up losing money if I was over leveraged at that time. So to close out on this section, all I'm saying is that considering your alternative options before putting down your deposit. I mean, if you have a strong conviction on an alternative investment and are comfortable with the risk, then the investment side of buying a house will make less sense. And maybe you should consider pursuing that investment and keep renting for a while. Okay, now let me give you my summarized view on this. If you live in a region where property price generally goes up and you believe you will be buying your own place at some point in life, then I think you should take actions sooner than later, because pushing back the purchase decision can be really expensive. For example, the property market was going through a boom back then when I was thinking about buying. The debate started in 2014 and was dragged into 2015. When I finally made my decision, the price has gone up so significantly and I had to basically end up paying $60,000 more. So I decided to just buy the bullet and get on board because I believe the price would stick around and the price would keep going up in the medium to the long term. And I was very lucky because I turned out to be correct. Having said that, we have to remember that what we end up buying is crucial. Although we are buying our personal home, so it is going to be a personal choice. I think it is extremely important to consider the investment potential when we are evaluating different options. This is because our personal circumstance and tastes change over time, and what we personally view as desirable now can be different in 5 years' time. And be aware that not everything is equal from an investment point of view. In Australia, for example, freestanding house with decent land size generally performs a lot better than city apartments. So for this reason, I ruled out city apartments as one of my options when I was buying, even though living in the city would save me so much travel time. I'm glad I made that decision because my personal circumstance has changed and now I'm traveling a lot less due to working from home. Finally, I encourage you to consider the hybrid model. I got my first property 8 years ago, but I'm still sharing a house with someone to this day. So after my property settled, I immediately put the property back to the market for lease and continued with my current living arrangement, and that is house sharing. Considering the tax benefit, the rent income pretty much offset the mortgage repayments and all the other costs. This means my borrowing power has barely changed, and it laid the foundation for my future investment purchase. And best of all, I still have my future home that I'm happy to move into at the right timing. So be flexible with your thinking. It doesn't have to be an either or question. Be creative and come up with your own action plan that suits you the best. If you do decide to buy a house after going through the pros and cons, here are the most important questions to consider. Question 1, are you financially ready? Buying a house is a once-off transaction but requires ongoing financial commitment. So some budgeting and planning is essential. Question 2, are you buying in the right market and the right property? So buying your first home may be a very personal choice, but let's also analyze the contenders through the lens of investing and make sure we buy something that also has investment potential. Question number 3, is this the right timing? I mean, it would be great if we can all make the purchase at the bottom of the market, but the truth is timing the market is very difficult, particularly for new buyers. There's a great saying in the world of investing, and that is time in the market beats time in the market. This is even more true when it comes to property. I mean, just make sure that you are buying in a region where the property price has a long track record of going up. I mean, you can Google the house price history in the area that you want to buy. Zoom out 5 years, 10 years, or even 20 years. You'll be in a good place if you see a steady upward trend. This will give you some comfort on the timing, as you can see, any point on that long upward trend line is a good entry point. Question 4, do you have an alternative investment? I mean, this one is obvious. If you find the next Bitcoin, then financially it makes sense to make that alternative investment because you can always buy the house later with the money you made. Again, this is not me saying you should invest your house deposit in the stock market. Remember, the higher the return, the higher the risk. I mean, if we lose the deposit because of some high risk asset, it may take years for us to save that money again. Instead of chasing high return, our priority should always be ensuring our financial survival. Alright, at this point, I think it's obvious that I prefer buying a house than renting one. But I hope it's equally obvious that I consider my house my future home as well as an investment. The investment element is at least equally important. And I hope you learned something from this video today that can help you make a more informed decision sooner. Thanks for watching, and I'll see you next time.